Welcome everybody to a new analysis of Tridomics. My name is Dario, and in this episode, we're going to focus on Tesla. We're going to use, as usual, the T-cycle analysis, a statistical mathematical methodology that is based on cycles that is able to predict on a statistical way the future direction of the price. This episode is particularly important for those who are investors or traders because, as for the title, as we will see, the earnings release will have a particular impact and will be a triggering point for the future direction of the price. As usual, we're gonna find it out based on cycles and on time what is gonna happen. First of all, let's have a look back at this low occurred in January 2023. And we're going to have an overview of the last year so that we can better understand what the focus will be for the next weeks. So with this low occurred, as I said, on the 6th of January 2023, we have had a first downward 3 months cycle, positive one, that finished on the 27th of April 2023. Subsequently, we have had another downward 3 months cycle, and the sum of the 3 months, the first 3 month cycle and the second 3 month cycle, allowed the development of a 6 month cycle of a total duration of 154 days, which is basically in line with a medium or even a little bit more than a median duration, as a T+4 can last between 94 and 168 days. We have had subsequently another 3 months cycle that in this case has been negative, and a second 3 months cycle that was negative as well. And the total duration of the second T+4 has been of 115 days. From this low that occurred on the 2nd of February 2024, we have had another T+3, which is still a negative cycle and it's ongoing, like for the others, and we have reached a total duration with the candle of yesterday of 52 days. So the last 3 months downward cycle plus the others have reached a total duration, if we count the yearly downward cycle, of 322 days. This is an important value because 322 days, it's close to the maximum duration of a T+5 yearly cycle, 338 days. So the first information here in this video is that we can still have a little time to go down or to proceed further to the downside. For how long? For over 16 days, as if we want to stretch to the maximum duration our yearly downward cycle to 338 days, we're going to reach the date of the Friday 10th of May 2024. This is a standard duration because if we consider the hybrid cycle T+5, then we can further extend the duration of the cycle from 339 days to 379 days. But this is quite seldom. So the hybrid cycles are really seldom. And therefore, let's stick to the standard duration of a T+5 or a T+4 and T+3. So we still have a little time to go further down, but we have 16 days at most to close a yearly cycle to the maximum duration. So we have 16 days out of 338 to go down. Therefore, we have 16 days of probability to further go down and all the others to further go up. So statistically, we have much more chances to see the price further, or recovery further to the upside. Let's also, as usual, look at the upward cycles that can give us additional information of the situation. We have had from the top of the 19th of July 2023 our first T+4, which is the upward 6-month cycles that ended after 114 days. And now we have another T+4 that has done the first monthly upward cycle. Here we have the second monthly upward cycle, and now we have a third monthly upward cycle. Now the total duration of this T+4 has reached 78 days, which means that we can see a pushback of the price toward the upside, because we have more than enough duration to close a T+3. It means that we need to go back up again to complete this first T+3 eventually. If they wanted to close a T+3, it's not given by fact that they can close a T+3, but they can also have another T+2. But according to the probabilities, generally there is a tendency to close not just the T+2 but also the T+3. I say here that there are a lot of chances to go back up again and close a T+3, and basically, given that we have had 78 days, so we still have 11 days to complete this oak on the upside. But we have on the other side, also from the downward cycles, 16 days further to the downside, and then all the rest to go on the upside. Another interesting thing, this is mostly for the short term, is that we have had a negative weekly cycle that now has reached a total duration of 9 days, so out of 11. So this might be the start of a new cycle that can push the price further to the upside for the next week, because now we have with the candle of today 10 days out of 11 for this weekly cycle. So from Monday onwards, we still have a couple of days to go to the downside, and the remaining days, which means 9 possibilities out of 11 to go on the upside. So I repeat, from Monday onwards, 2 chances to go on the downside and 9 chances to go on the upside. So for the short term, we should see a reaction of the price to the upside. But for the long term, be aware that after the earnings that will happen on the 23rd of April, the earnings might be a triggering point to close completely or to start a new yearly downward cycle, which will have, at least from the start, the following shape, like this. So as the time is really stretched and is going to run out, a lot of probabilities to go up rather than go down, despite the earnings that might be positive or negative. Hedge funds and HFT, high frequency trading, will take the opportunity to start something new.